Welcome to the Accounting Success Podcast. Ian Wellham is a chartered accountant, helping other CPA firms maximize their profit potential and become the most relevant advisor to clients. To learn how you can add value, introduce new revenue streams, and move into high-value advisory services, simply go to www.haydenrock.com. On the podcast, Ian brings together successful accountants and industry thought leaders to share with you how they serve business owners and how you can too. And now, here is your host, Ian Wellham.
Hello, and welcome to the CPA Success Podcast. I'm really excited today because with us on the call is Alex Boyd, the Director of Growth at inDinero. inDinero is one of the biggest success stories in the accounting industry today. They're growing by leaps and bounds, and their story has been featured in the Wall Street Journal, New York Times, Forbes, Entrepreneur, and almost every other major business publication. So I'm thrilled to have you on the call today, Alex. I really appreciate you taking the time.
Thanks, Ian, so much. Good to be here.
For those of you who haven't heard of inDinero, perhaps you could give us a brief outline of how you work with business owners and entrepreneurs so that you can help them run and grow their business.
Yeah, definitely. So inDinero was essentially born to be a simpler, more modern way to run the back office. So essentially what we are is an outsourced controller service plus proprietary technology. Tied all together, it's a bookkeeper, tax, CPA, and a QuickBooks replacement, but all in one spot.
Wow. That's quite a streamlining and improvement in that area of the industry, I think. And it's not just a do-it-yourself solution. You're not just selling software. You've actually figured out how to combine software plus the service in the form of human interaction, which is very special. It's an accounting success on top of technology. I think that's what makes your service pretty unique. How important is the combination of technology plus service to your success?
I think it's the one thing that's made us successful. I mean, after all, you have Intuit, you have QuickBooks and Xero taking over a lot of the DIY market share of filing software, and you have a plethora of accounting firms and local bookkeepers that do the service aspect. But really very few people, and not too many that are still around, with a few notable exceptions, have actually done both in one. And nobody does both in one quite the way we do it. So it's the single most important thing that's had our customers want to join us more than anyone else, and it's the one thing that made us successful today.
What do you mean by quite the way we do it?
Yeah, good question. So there are a few other kind of competitors that work near us in this sort of a similar market share. But most of them do it with either kind of not with their own software, but an add-on to QuickBooks, or they build their own software, but they hit a different market share. So, take Bench, for example. They and we don't really overlap too much, and we actually routinely recommend each other to different clients. So most of Bench's clients are freelancers, whereas we have very few freelancer clients. So there's often opportunities for us to do different things, different price points, and people who need a much lighter level of service than we are set up to provide. We turn that business away for now. And business that's more complex than some of the simpler competitors want to do, they send that our way. And so there's a kind of a relationship where, a few different firms are attacking different market shares in this entrepreneurial landscape. And so we're kind of sitting right in the middle there with, you're getting off the ground, you're in a growth phase, you haven't quite maybe brought the whole finance function in-house, but you're more than a side project, you're more than a freelancer, you're looking to grow. That's really where we stand.
That's great. So what was it that you heard from the clients that pointed you in the direction of software plus service?
Well, we actually began as a software. So when inDinero was first started, we were in the Water College program. We really were just like men for business. But the big demand was not for fancier graphics. I mean, that was good, but people really wanted more of a value add. They wanted to speak to someone, wanted expertise. They didn't want to do their own books. They didn't want to deal with it. So the full whole service aspect of inDinero was really born from that, saying, okay, we can not only increase our average sales price, but also bring more value by doing all these different things. And we began with just after, and then we added payroll too, but we still do the rest of those, and we found it to be much more valuable. We can not only charge a lot more because we're doing more, but really, we really can't say, hey, you hire us, that's like hiring a controller, but for a lot less money.
For a lot less money. That's excellent.
And a lot better of a solution. Yeah.
Okay. Yes, because I think, did you find that a lot of business owners don't know what they're missing in terms of their information that they have to work with?
Many do, yeah. A lot of people will come to us and they'll have things that they need, things that they expect from their reports, their financial statements, and they won't really know what they're missing, like you said, so they'll have their own processes. Sometimes they'll be open to switching and they'll know what's kind of hurting. Like, I spend all this time paying bills. My bookkeeper is the one depositing checks in the books. I kind of worried about that. But sometimes they'll show you these examples of what they expect, and you'll go, this is just nutty. We can do this a lot better and simpler. So the kind of expertise that we lend in the onboarding process to just kind of refactor everything and reset the expectations of what should you be looking for, right? The purpose of accounting and financial statements is not just to give you reports, it's to help you make decisions. And so we're constantly asking ourselves, for every customer, for every demand that they have, going to help you make better decisions. When we challenge them on that, like, hey, I don't think this thing you've asked for, this report, this feature, is going to help you at all. They often realize that it was just something that they thought they wanted, but it didn't actually help them. Just reducing signal strength.
Now, do you find they sometimes fire their old accountants?
Well, that's really the place where we come in. So people are often transitioning accountants when they bring us on. Either the previous bookkeeper is retiring or being important to cut it. Their current accounting firm isn't able to allocate more resources to them. They want something more scalable. So we do often do that, but there are some situations where we just play right alongside. So, for example, you'll have an in-house bookkeeper be completely overwhelmed and actually want to move up in their career, do more of the stuff that we don't quite do yet, meeting with management, helping to act more of as a real CFO and advisor, but instead they're stuck in doing bookkeeping. So they'll bring us on when something isn't quite working about that. Maybe they want to move on, maybe they want to move up, one of those reasons.
Right. So what's your sweet spot in terms of the size of the businesses you prefer to work with, and why this size?
Yeah, it's really been changing a little bit lately. So when we first started out, it was really 30 employees or less, but more than a handful. And the reason for that was when we were simpler, when we had less capacity overall, when we were a less sophisticated company, we found it easier to handle less sophisticated companies. So as we've grown from just 30 employees to over 200, we've been able to handle more. So really our sweet spot is still kind of in that 10 to 50 employee range, but our largest clients have 200 plus employees. We've even broadened out a little bit on the downstream market, so we can now handle jobs sometimes if they're doing enough volume.
Okay. Often, is employees a sort of measure that you use, or would numbers of transactions or the actual size of the business in terms of its gross income be factors as well? It
really would, yeah. So there's some interesting situations where you have these businesses that do a ton above the average in terms of revenue per employee, but they're usually pretty rare. So the number of employees is, generally speaking, a pretty good indicator of transaction volume, revenue, complexity, because with more moving parts, you have more accounting work to be done. There's a couple companies that make tens of millions a year in profits, but only have 10 employees that are with us. And they're actually relatively simple. Others have 20 employees and don't make a dime. So it's very interesting, but it's generally a good way just conversationally to talk about the size of a client.
Okay. So In terms of the the industry sectors, we're going from retail to publishing to travel to financial services. Today's business news is about industries that experiencing disruption. Yet the accounting industry is one of the few that are slow to modernize. They're probably stuck in the 19th century. Why do you think that is?
It's really been less than glamorous to get in here and modernize accounting. We that join and are part of inDinero, we don't have, not everyone has a great love of bookkeeping. What we love is simplifying, streamlining, modernizing. But where this was all born from was, our founder Jess was starting a company while she was in high school and college, and felt the pains of bookkeeping herself and wanted to solve that pain. So this is kind of the way we found to really step in and help solve a pain point that was really there. And, there's a lot of people already solving marketing, financial services pain points. So the accounting industry was less competitive when we first began. So that's another attraction that we had to it.
So how did your founder recognize the pain points at such a young age?
Starting a number of businesses from a young age just leaves you with less experience to do it. And just we're all still pretty young here, and so we bring in outside experiences, but still have a lot left to learn. So not having been CFOs of companies before, there was more to figure out and more of saying, I really don't know what I'm doing. What is the IRS going to say if I deduct this expense? Who's here to help? And so that was many years ago, kind of realizing this is my first time starting a business. It's a tech company. I'm a new founder. This is hitting me harder than some of my peers who are a little bit older than I am, who've done it before. And that's why it became such an acute pain that we really wanted to solve.
Right. And she started the company when she was about 20 years old, correct?
Yep, right around there. 2009, 2010, we went through Y Combinator. And then 2012, we underwent a major pivot going from software to full service. And it was kind of a public pivot, too, all over the news. And the turnaround documented in all the publications you mentioned earlier.
Wow. So I entered the accounting profession over 30 years ago with Ernst & Young. And the profession was slow to change, even in the Big Four, probably more so in the Big Four in many respects. And it's still slow to change today. How do we get that to change? What's the wake-up call that's going to wake up the whole profession?
That's a great question. As much as we're expanding, we're not quite on the radar of that many people. We have roughly 800 or so clients, but the market that we can serve is in the tens of millions. So I think it's going to take someone like us stepping up and becoming a lot more on the radar and actually taking market share from old players, especially moving upstream. So as our contract size has been growing and growing every quarter, and that's part of my role is to help that grow even bigger. How do we take on even bigger clients and do this well and increase the size of the client that we can take? So as that grows, as our market share grows, as we start getting on these people's radar, it's going to become more painful to say, okay, they're not just the drop in the bucket anymore. We get to do something about this. By that time, we'll already be rolling even faster than we are now. So that's the hope of what we're trying to get.
Okay. So really, you're saying that one or two game changers in the industry is what's most likely to bring about change and kind of elevate everybody's attention?
Yeah, I think so. I think it's going to take someone like us really getting up there and not just getting on the front of magazines that say how fast startups are growing, but actually becoming a large player. For example, someone like inDinero going IPO could definitely be an indication of that.
Okay. So how do you continue to ramp up growth at an exponential rate?
That's a great question. It's been very fun to do. Taxing for a lot of us here who are on the management side and the growth side. But it takes really careful planning. So one thing as a pure tech company, you wouldn't really need to worry about your staff and your resource allocation quite as much as you do when you're someone like us, where every new client you bring on has a certain number of man hours associated with their account. And so cross-department resource planning has been a skill that I've had to gain on the job really fast over the past maybe year and a half or so. And it's not been easy, but we've been able to do it now. We have a really good handle on it at this point. But it takes working with recruiting, account management, accounting, tax, bookkeeping, sales, business development, and marketing all together, times on just one document saying, here's what we're going to need, what we're going to bring on, to make sure our clients are all happy and have enough time associated with them. But the fact that it's not as easy as adding more server space does present a challenge that we've had to tackle head on.
One of the things we obsess about here at Hayden Rock is delivering more value than the client expects and continuously doing that. And the phrase we use is to dazzle or delight clients. And I had to smile a little when I was looking through your materials and saw you use the exact same expression, dazzling clients. Can you talk about that for a minute and how to make that happen?
Yeah, definitely. There's a lot of ways we've made that happen over the years, and they definitely changed. Also depends what kind of client it is, where they are. Something as simple as a thank you note after they sign up, something as technical as turning over a stone in a tax return that they didn't know about and saying, hey, I found you some extra money to deduct, bringing up a tax credit they didn't know they could qualify for, things like that. But, it goes back to going above and beyond in every way, right? So if we can not only handle their accounting, their tax, their finance better, but we can uncover a need for, a new lawyer, and we can use our network to leverage that and bring in outside experience, then we can go above and beyond in every way. So dazzling our clients to me just means saying, here's the structure and the scope of my job. Now, what can I do that's going to help them that's outside of that? That's not one of these bullet points. So I'm always talking to sales about, what did you do to go above and beyond? Did you help with anything other than accounting and tax? Did you make referrals for other providers that may be able to step in and help? Did you identify any other ways that we could help that maybe they didn't even bring up? So that's what we try to do a lot of, and that creates happy clients, that creates referrals, which is an enormous way we get new business, which is still word of mouth. So it means a lot of things to different people in different client sizes, but try to approach it really holistically.
Mm-hmm. And so I assume you get involved in other areas than the compliance and record keeping and so on. Maybe such things as consulting or advisory services?
Yeah, definitely. So one of it used to be a side benefit, but now one of the prominent benefits that we're more overt about is that when you work with inDinero, if you're needing that kind of service, you're working with account managers and CPAs that have done, in some cases, hundreds of other startups accounting. And not only can they tell you what, not really necessarily your competitors are doing, but what your peers are doing in the industry, what platforms they're using, what softwares they're using, how they're handling things, without naming specifics, what their margins roughly are, what you should be shooting for, is really valuable as just anecdotal benefit of working with their team. But then often they'll just start coming to us with more. So the more that we offer, the more beyond that we get asked for. So, for example, startups that may have in the past just gone to us for bookkeeping and their taxes, they're now saying, hey, I heard you help my friend John with his budget and his projection for investors. Can I run mine by you and see what you think? And sooner or later, you have everyone saying, I want budgeting, I want forecasting. And suddenly you have, our CPAs helping with just these things. You have salespeople building budgets for clients before they sign on. And you have big demand for the product team to build more of this stuff into the product. So it generally starts like that, but it's kind of like if you give a mouse a cookie, they're going to keep asking for more. And I like that. I think it's a really cool challenge. But we definitely want to do a lot more of that consulting and CFO level work. We do some of it now. Admittedly, I'd love to do more. So that's a big area in the next year that I'd like to push more into.
And what about for the companies which are a little more mature and they realize that they need your services, and actually, do you help them define the direction that they want to go? Do you help them work through what kind of eventual exit strategy they want to reach?
That is a good question. To some extent, we really don't end up being the CFO right now. and helping them decide on strategy. That said, we do step in at some key points. So being that we began really heavily in the startup market, a lot of our clients needed help with their exits and their acquisitions. So we do, probably a couple M&A transactions per month. We're not handling the legal aspect, but we're doing the books for it. We're advising on tax implications and so forth. So we do a good bit of that, and we do some consulting around that. But on a regular basis, we're typically not quite acting as a CFO, but we're actively hiring for the leads of our branch of service that's going to help do more of that stuff. So that's kind of the next level of where we're getting into, is the higher level consulting. We kind of do the kind of consulting that a controller typically does. But the salespeople at our firm typically don't describe us as an outsourced CFO.
Okay. So it seems to me that your company model includes lots of independent team members and perhaps people working on the other side of the globe even. With so many people working independently, how do you handle accountability? How do you keep everybody in line doing the things that support your brand and make inDinero that special company?
That is a good question. We start by really just making everyone into their own squad or team. So starting with every company meeting, the disclaimers and announcements that no financial information discussed outside the team ever. We kind of siphon everything off. Number one, for privacy. So you have a pretty minimal staff working on each account. So there's really not a whole lot of hands in the pot, so to speak. The other nice thing is we like to be all together. So we have 3 locations. The main one with the most employees is in Portland, and it's a very open plan office, and there's very unsiloed. That's where I am right now. So you have everyone on the same floor. The noise level has been the main thing we try to control, but everyone's in the same place. And so the nice thing about working across departments is you can always kind of ask for that accountability. So we have a very transparent culture where you can really dive in and no one's getting on your case for saying, hey, talk to me about your resource planning this coming month. Let's make sure that that's on point. So it does become an issue as you grow, but it's been a primary thing that we like to tackle, which is the risk management, the discipline. That's another one of our core values, along with Dazzle, our clients, is discipline and accountability, and that's probably my favorite one right after Dazzling. So, that's how we handle it.
So, well, recently I read an interview in the New York Times with Jessica Ma, your co-founder, and Jessica was asked about her hiring practices and what her favorite interview questions are. One of the ones she likes to ask potential employees is, what's your most lofty ambition? Mm-hmm. Now, inDinero is clearly on a major role and experiencing exponential growth. So as Director of Growth, what's next, in your opinion? What's your most lofty ambition at this point?
That's a great question. We do love that, and we've had a lot of entrepreneurial people and entrepreneurs themselves be on the team. Thinking about the growth team, I want to say roughly 3/4 of our departures from the team over the last 2 years have been people starting their own companies. So definitely on board with that. For me, my next big thing here, I really want to take us to a whole new level. I want the contract sizes to be 3x what they were. I want to plunge into new challenges and find new ways to grow the business in that way. I really want to move upstream more and develop that kind of refined technical ability in all of our people so we can continue to increase sophistication. That's really what I love, is developing people and making them be even better, not just at doing more work and keeping them motivated, but at increasing their caliber every day. So for me, that's what I really want to focus on right now.
So on a day-to-day basis, what is the thing you like most about the work you do?
That's really my favorite one is coaching. Coaching people is my favorite thing, whether it's my department or others. Just yesterday, some of the accounting staff said that they work with entrepreneurs who are very demanding, and they wanted a little training course from me, they said, on how to deal with demanding entrepreneurs. I thought that was really funny. My first thought was, why are accountants learning to deal with demanding entrepreneurs? But I guess they're on the phone with them often talking financials, and so they like to be able to have the skills to respond to for example, someone saying, I know you have 10,000 transactions, but I want to be onboarded in a week from today. I got a board meeting. And they don't always know how to explain that that's not at all possible. And so they wanted a workshop on that. So that kind of stuff is my absolute favorite, just training, coaching, sitting down next to anyone at all and saying, okay, show me your process. What are you doing? And helping to make that better.
So what do you like most about the work? I beg your pardon. What are the things that you feel the company does especially well?
That's a good question. I think that streamlining is the best one. It started with just the product itself and saying, okay, how can we make this classic process of bookkeeping better? We've really done that, and we're really efficient at bookkeeping now, but the mentality goes everywhere. So at this point, everything from the way resources are allocated to the way different squads work on different clients, the way we communicate without email, just on Slack, to the sales testing. I mean, it's all very efficient. It's all very cloud-based, automated as much as possible. And that has translated into lower and lower prices for our clients and more fun for people who work here. So that's my favorite thing, is how do we streamline and get to a point where we're doing as little busy work as possible. And to me, that's the future, which is why I care about it so much.
Yeah. I suppose on the other side to that, what do you wish you did better?
Yeah, there's always a lot of those. I'm very open about the challenges that we have, and I would say one thing we've done okay at that we could really improve upon is preparation better for the future. So we like to look a few months out, but I feel like there's not that many people here, especially when we are really in the heat of things, when we're really trying to focus on the challenges today. It takes a lot to step back and say, where are we going to be in a year and 5 years from now? And if no one's there to say that, then in a year and 5 years from that point at which you last said that, you then have what seems to be a messy strategy. And so what I want to do more, what I think we can do better is clarity of strategy for the long term, even when you're in the heat of things and you're experiencing challenges and all you want to do is sit there and look at the day-to-day and solve these problems. But you have to make time for that long-term vision. If you don't do that, you create a situation where you didn't have it a year ago and you wish you would have, even if you were stressed a year ago.
So do you regularly make time for future thinking? Does the management team set aside time for that?
We do, and we really force ourselves to now. In the earliest days, we did it ad hoc, and it was something that we always did. But as the company grew and as our responsibilities grew, some of us put that aside, and we really needed to bring it back now and make it a formal planning sessions. We talk about it in the company-wide meetings, management meetings that we really do focus on and make sure that's a priority. We often like to bring in, rank and file staff as well, people who are not management but just are on the ground and know really well what they want to see. We bring in a lot of variety of opinions, document them all, pass them around, clarify them, bring them up, and we do that regularly.
And how often does that future thinking group or meeting happen?
At least once a month, if not more. So we like to keep it at least once a month, but not too often. There's definitely something to be said for not merely living in the clouds the whole time and just really getting it done on a day-to-day basis. But I think at least monthly is when you got to make sure that you're on track, right? That's 12 meetings a year. A year is plenty of time to execute a long-term strategy, and 12 meetings is, I think, just the right amount or so to really get there.
So it sounds like you're juggling a lot of things at once. How do you manage the demands on your time?
That's a great question. Ideally not with the 80-hour week, though we do some of that sometimes. Really one of the best things is giving more responsibility to people. And I encountered this when I read the 4-Hour Workweek a while back, Tim Ferriss's book, when he said it's amazing how much better someone does when you give them the responsibility and indicate that you trust them. I found that to be true too. I think you can get a lot more done when people have to ask for permission a lot less frequently and they have a process they can rely on. It's kind of like automating management in a sense. It helps people feel more empowered. Well, they actually are more empowered. They have to ask for help less. There's fewer conversations, and it helps them get more done. And instead of just saying no to things, which is a common pattern of reducing the demands on one's time, is to let people do that for you and to delegate the management responsibility out, which I found to be really effective.
Mm-hmm. So inDinero found a niche that actually few others seem to have spotted. As you look forward, where do you see the next opportunity?
That's a good question. And I think the main debate recently has been around, okay, where do we go from here? And there's a few different axes of these debates. One is, do we branch upward, downward, or horizontally? So the upward camp main theme is we need to be looking for not 50K a year contracts, but 100, 200, 300, and focus on a small group of people, a small group of clients just for that. Downstream camp wants to move more into larger amounts of clients that are all very simple. And then you have ideas such as, can we go to the side? Can we also bring in more consult services, more CFO, and then maybe even legal services? And then what about international tax consulting? What about geographical expansion? There's a lot of different directions in which we can go. I tend to find my favorite is somewhere on the balance of, let's do the low-hanging fruit in all directions, and then pick our favorite, the upstream, to really push more into. But the nice thing about the next things on the road is that there's often low-hanging fruit along the way on the side. That's really fun to pick up as you go down one specific area. But one of the ones I'd love to get into is the other related services that are related to managing money, but not necessarily accounting and tax. More consulting services. How do we make that more scalable? That's a really favorite question of mine to be asking.
Yes, I can see why you would think of it like that. I like the idea of the three-legged stool there, that you've got those three opportunities. Perhaps you'd like to share with me something that I didn't ask you that you wanted to talk about.
That is a good question. Many people ask us when we're coming to country X or Y. And that's a common question I get too, is like, why don't you guys do this? And I've heard them all, starting with Canada and the UK, branching out from there. But people in Italy, Northern Europe, Africa will come and ask, why can't we do this here? And man, I'd love to. That would be so much fun. And if the investment of time and technology weren't so monumental and the regulation aspect so cumbersome in many other countries, it would be a lot more appealing for us. But the geography question has been really focused on, hey, we got a lot of business to do in the U.S. It would be fun and really cool to even go to other English-speaking countries first, but we got to get a bank API that works in other countries first, that works well, and then we have to start up the whole new offices, the expertise. It's, again, going back to the question of, other tech companies can simply buy more server space, oversimplification, but you get the idea, whereas we really need to invest and take careful steps in any direction we go into. So a lot of times people ask us, why aren't we doing X or Y? And it's because we do need to move a little bit slower, even if we grow fast. So that's a pretty common one that I often get, especially from potential clients in those other countries too.
So perhaps I could ask you, to the traditional CPAs, what advice would you give to those guys today? What do they need to wake up to in order to not just survive, but thrive?
There's a lot of things that they can do, but bundled into just a couple of different areas. I would say those are, A, being proactive, and then B, using more technology. So being proactive meaning going above and beyond like we do to take the extra mile, not just being reactive and saying, hey, do your books, send me them at the end of the year, I'll prepare your return, but going the extra mile to uncover those stones for your clients, to help them with other aspects of their business, to use your network to find other areas in which you could potentially loop in a consultant or a friend to help out, and providing more of that value-added consulting help. That's a big one that people come to us for. Hey, my bookkeeper, my CPA wasn't doing this for me. I really want this extra pizzazz, this extra product, this extra rapport, this extra, insight that you guys can give. That's why I'm coming to you. And then you have the technological aspect. People using QuickBooks Desktop when they could be using QuickBooks Online, people who don't make use of add-ons and other technology that could make their lives easier. You really got to start. We certainly think that inDinero bill pay is great, but instead of writing checks, hook up Bill.com with QuickBooks Online, integrate that, and maybe make your life easier. And then have your accounts payable people doing something more interesting with their time. So the value add, the proactive aspect, and then the willingness to adopt new technology are two main reasons why the traditional CPA can really get an edge on their peers.
Well, I think that you're really singing from the same song sheet as we are here at Hayden Rock. But unfortunately, our time's just about up. So I'd like to thank Alex Boyd, Director of Growth at inDinero, for being so generous with his time today. Thank you, Alex.
Thank you so much, Ian.
If people want to learn more about inDinero, what's the best way to do so?
Just visit us online. We're super friendly. There's a little Talk to an Expert button up there. Just set up a call, and we love to chat. So get in touch with us that way, and I encourage anyone to do so.
Could you give us your website address?
Yeah, inDinero.com, INDINERO.com. Like in the money. And the next most common question is how do we pick the name? Kind of catchy, and it stuck, and here we are today. But yeah, inDinero, but that's our website, and that's the best way to get in touch with us.
Okay, there you have it. This is Ian Wellham saying goodbye for now. We'll see you next time on the Accounting Success Podcast.